Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, April the 26th. The year's 2022. Let's talk trading. Master of One, Part 11 with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, it's kind of funny. We talk about Master of One, but we're up to Part 11 already.
Who thought about that? That could be that in depth. But I was thinking about this. I was making a cup of coffee, and I was thinking about, okay, what can we talk about today? And one of the things that I haven't talked about really that much, although we talked about it a little bit yesterday, and that is, how do we go and be pragmatic about this? In other words, how do we actually, okay, we talked about all, or at least I talked about all the different, things out in the ether about what you should do, but how do you actually make it more practical? And one of the things that popped into my head is I talked about this at one point in time in this series, and that's this idea of focus, right? You got to focus in on your trades. You got to focus in on what you're doing, and it's I think that's one of the biggest failings that traders have is that there's a problem with focus. And the part of it, I said this in one video, the focus, okay, what do I do? I make sure there's nothing on my screens other than what I'm trading, and when I get to the point where, okay, I've made my money for the day and I'm just going to go and poke around a little bit, yeah, then I'll open up the web browser and start looking at other things. And, and it's sort of like, I don't take it as seriously, which maybe that's not a good idea, but I just basically I'll do it then. But prior to that, when I'm in a mode that I need to go and trade and I need to make money, I just focus and become hyper focused on what I'm doing. And I think you said to me, I don't know how many times over the years, and hey, are you in a trade? And I said, well, why do you think I'm in a trade? And he'll say, because you just went dark on me. Just,
Yeah.
and that's part of it. And I was thinking about this idea of focus, and I been thinking about what do you do to stay focused. You know, one of the things about trading, the easiest part about trading is getting into the trade, because all you have to do is press a button and you're in. Let's just be honest about it. But the thing is that I think we lose our focus sometimes because we overcomplicate things. We make things more complicated than it really is. Because the reality is, to get into a trade, all that has to happen is a bunch of circumstances or a bunch of things that you look for whatever method that you are using, have to be met, and then you press the buy or press the sell button. But we as traders, I think we go and we overcomplicate, excuse my language, the crap out of things.
Well,
And
one
so
of
what
the
happens?
yeah, I was going to say one of the things that I talked about a few videos ago was a quote by Steve Jobs, and he was basically saying focus is saying no to to everything except for the one thing that you're quote unquote focused on.
Right, exactly. And that's what you got to do, and you just need to be able to walk away from those other things. And I've admitted on, videos with a number of times that I'm a squirrel. Like I wind up, you throw anything shiny in front of me, and all of a sudden, I'm like, boom, I got to be there, and which is very bad for trading.
Hmm.
but but this idea of complicating the junk out of things is just crazy. I've seen traders, I've talked to traders, and they're having trouble with their trading. Then you look at their screen and they got 45,000 indicators on there. You can't even see what price is doing, and they've just complicated to the point of, not being able to trade. And so they can never go and take the trade. And then what happens is, out of frustration, well, if I'm going to make money, I got to be in a trade, right? So boom, I'm in a trade, even though they have not really followed their trading plan. They're in a trade because they are in a trading. They're in a trade rather because they're in a trade for no other reason. Meanwhile, conditions A, B, and C were not met in order to be in that trade. And now they find themselves, okay, as you like to say, I went in at an inflection point, and it went against me, and now I'm sitting it down 5, 7, 10, 15 pips. Now what do I do? And that's where I think a lot of times a lot of traders get into trouble. Focus, stay on task, and so the pragmatic part of this, how do you do that? Well, and for me anyway, the easiest way to do it is you have to uncomplicate things. Okay, you need to make things as simple as possible. So, for instance, like a lot of people say, what you're supposed to do is that on any trade, you're only supposed to go and, your lot size should match, a certain percentage of your account size, and that's how you figure that out. And that's why you go and trade, X lots. Well, to me, that's a lot of calculating you got to do right before you get into a trade. It complicates the crap out of it. Yeah, I know there are desktop calculators to do it, but that's complicating things. Okay, if you know that, my account is X size, and I'm willing to go and lose 1% of my account, I know what that number is, and yet at the same time, if I know that really truly I'm willing to lose 2% for the day, well, there's only two numbers that you need to know. I'm going to trade X. I'm going to go and trade A lots, and as soon as if I get a loss bigger than B dollars for the day, that's it. Those are the only two numbers I need to know. I don't need any calculators. I don't need anything figuring out lot size. I just make it simple. Today, I'm going to go and trade 2 lots all day long, no matter what, until I lose the amount of money I'm willing to go and lose for the day. Or hopefully it's not lose the money, but I'm going to trade that amount until I make the amount of money that I wanted to make for the day, or what my goal is for the day. And just that simple little thing right there, you don't have to do all that calculating, and it just eliminates some thinking power for you.
Right. Because, one of the things that's I've been, telling traders is it doesn't really matter why you enter. And I said, somebody might enter at the exact same time in the same direction you enter for, one of a million different reasons. And so it just really shows almost how insignificant the reason you enter is.
Oh yeah, and I would agree with that. I mean, I've joked with you in the past and said, you could almost take it. I really believe if you have your money management in place correctly, okay, and you have your exit strategy in place, you can just randomly enter the market, and I think in the long run you'll make money as long as the exit strategy is correct, because part of your exit strategy is making sure you don't lose money.
Yeah, well,
And
I don't know about the random part,
right,
but I think, for example, look at the pound. Pound's going down. It might be something as simple as saying, I am going to trade away from the open
right,
until, away from the daily open, until price, say with the pound, the range reaches 100 pips, or it's 100 pips from the open.
right,
Beyond that, I am not going to trade long if price is below the open. And if you, you can
right.
look at a chart and go, could it be something, a filter that simple? It's kind of like going, not going against the H1, even though now
Right.
I've revised it since trading with you as the M30, because let me switch over to a M30. We've seen how many times price will reverse and go back and cover on the M30.
Yeah, it does that all the time. It just it loves to cover that M30, and I think you ran the statistics on it, and
Right.
it was an inordinate number of times.
Well,
And
yeah, on M30, yeah, M30 was the
yeah,
best.
right. I mean, it did it on other time frames, but it was significantly better on the M30.
Right. So, like,
And
this current candle covered the previous, then turned right around and slammed down.
yeah, and so and that's the advantage or the beauty of having something like that, something that you observed. It's not complicated. That is not complicated. It's that thing you look at the chart and say, hey, this happens more times than not. Okay, that's going to give me a bias. That's not a reason necessarily to enter the trade, but it's a reason to go and give you a little bit more confidence in entering the trade, and it's not adding anything that you got to think about. You look at the chart. Yep, it did it. Okay, we're good shape. let's go for it. You know, and I've got my triggers for whatever they are. You know, so for instance, you know, I like to use it. I said this yesterday. I like using the high-low boxes. If I got a day that's expanding, I like to go and use the high-low boxes to go and actually take extensions, what I call extension trades. In other words, it's breaking through the bottom of the box. Does it happen all the time? No, it doesn't. But it happens often enough that you can make money on it. You know, not too long ago, it was, I don't know, maybe 15, 20 minutes ago, the high-low boxes were only like 5-6 pips apart. And now they're what? I'm going to measure it real quick. Right now they're 24 pips apart. Well, there's only one way that could happen, and that is that they broke through the bottom of the or the top of the box. You know, so I like to take that trade. Oh, look at that! You know, if you look at the beginning of this hour, you know, it's going to go and cover the 30-minute trade. Likes to cover that 30-minute previous candle, and now it's breaking through the top of the box. Well, that's a simple trade. And there's nothing complicated about it. There's nothing, you know, I'm not looking at all types of squiggly lines and looking for crosses and looking for this and looking for that. And next thing you know, I've got a checklist that's, you know, 30 things long. And next thing you know, even if let's say that it's a successful method, you know, the reality is I can't get through all the checklists before the trade's done and over. You know, so that's what I mean by stay focused. And part of keeping it focus is uncomplicating it, breaking it down to its simplest forms, and having as least number of steps that you have to go through. Hopefully that makes some type of sense for somebody out there. That's what I do.
Right.
You know, you know, maybe I'm just too simple of a guy, you know, and that's just how I look at it, because that's my personality. You know, always been, you know, when I was in business, I was always just looking. I'd go into a situation. I was hired, most of the times when I was hired as what they call a fireman in a business situation. In other words, the company's not doing very well, okay, and they know they have problems. They don't know what the problems are. Go in as a fireman and try to go and put the fires out in the company so the company can turn around and make money. And that's generally how you know, what I was hired to do with most companies. And as an engineer, I always look at things systematically, break things down, and find where the problems areas are. Get rid of the problem areas, and just make it simple. And generally speaking, when you go and eliminate 45 steps from a 50-step process, and you only have, you know, 5 steps left, you know, I hate to say it, but unfortunately, some people usually, you know, lost their jobs in the process. But they really weren't doing anything other than creating chaos. Well, I think
that's funny.
But I think you'd say the same thing about trading. You know, we have 50 steps in the process to go and take a trade, and 45 of them were contradicting each other.
Right.
And so now what's happening is you're confused.
Yeah.
You know, and now you got to go and figure out a way how to get out of the confusion.
Yeah, so for example, we just crossed above 126.75, but you know, looking at the chart saying, hey, I'm only going to short because it's still below the daily open. And it's like
Right.
you take it the first time it hits, and then maybe it'll bounce, but maybe you stay in the trade unless you get your stop loss gets triggered, and then you can take the profit, because on this particular candle, it crossed the 75 and went all the way down to 67. So
Right.
that would have been a nice little trade.
You know, and part of this is what I like. You know, when I first started, a friend of mine went and introduced me to you, TRO, many years ago, probably 2009, something like that. No, it was later than that. Probably about 2010, 2012, something like that. And what I really liked about your material, if you remember, there was a little paper that you put out, it was a PDF. And I don't even remember what it was called, but it was only like a page long, maybe 2 pages long.
All you need to know about trading.
Yeah, that was probably it.
Yeah.
And what I liked about it was the whole idea, just simplify it.
Mm-hmm.
It's either going to go up, you know, price, you know, and the first time I read it, you know, I didn't believe you, because the thing is, what you said in it is that price can only do 2 things. You either go up or it can go down. Okay? And my big pitch against it was, no, it can go sideways. But no, it really can't, because in the sideways market, it's still going up and down.
Yeah.
You know?
Yeah.
And eventually, it comes out of that sideways, and it went up or it went down.
Yeah, and
So,
guess what? The fastest 15 minutes in trading is up. So, fellow traders, focus, Because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.